As would be expected, a large green candle with high volume and short wicks would be accompanied by a sharp increase of the AD indicator. The AD indicator doesn't do a good job of accounting for gaps. Price technically closes higher compared to the previous day, yet AD falls slightly because the most important thing is the closing price of the candle in relation to the high and low prices, in addition to the proportions of the candle body and wicks. The next day also technically closes higher compared to the previous day, but there's an even sharper drop due to there being a larger red body candle closing lower in proportion to its high and low prices. And when price closes down and there is a gap down, there is a natural decline of the AD indicator, which is more intuitive. Now watch AD increase while price technically closes lower. This happens due to a green candle forming after a minor gap down. Again, the closing price of a candle in relation to the proportions of its body and wicks is more important than a gap. This also demonstrates how a divergence of AD and price action does not necessarily mean an immediate reversal will take place. When there are narrow gaps or no gaps at all, it's quite intuitive and there's no discrepancy with the smooth transition to a reversal. With the current minor upward retracement, there is a fairly large divergence in the short term due to this gap up and longer upper wick in combination with the contrasting large red body candle with higher than normal volume. Then when there's an absence of noticeable gaps between candles and price closes downwards uniformly, it's a flatter decline of AD due to there being only a minor overall decrease in price over the past 3 days, along with volume rapidly decreasing. Price and AD continue to get back in sync and move in unison towards an overwhelming bullish continuation that is helped by large green-bodied candles and increasing green volume. Looking at the bigger picture, the overall trend is still up for both price and the AD indicator, even though in the short term those 3 red candles did have a major impact in dropping accumulation distribution values at the beginning of 2021. Moving ahead, there's now a minor drop of closing prices in the established uptrend, while AD has been dropping overall. The discrepancy lessens, but there's still an overall drop of the AD indicator, which is moving flatter now, while price continues to gradually increase. Finally, price and the AD indicator get back on the same page in terms of moving in the same direction, leading to the identification and confirmation of a strong uptrend continuation. The shift to a downtrend is quite orderly with no major discrepancies between the AD indicator and price due to the highest closing prices coming from green candles, which are immediately followed by a large red-bodied candle with almost no upper or lower wick and narrow gaps between the candle before and after it. After a noticeable gap, there is a green candle which causes a disconnect with price dropping but AD remaining relatively unchanged. This would be different if it was a red candle following the direction of the drop. But within no time there is a row of green candles which firmly place the AD indicator and price back in the same direction. Then there's a minor discrepancy where price is remaining relatively unchanged but the AD drops due to low volume and relatively small candles, with the proportions of small bodies and relatively balanced upper and lower wicks. It's a familiar characteristic we've seen with retracements that take place before another continuation carries the trend forward. Now with volatility increasing noticeably, a downward reversal does become more likely with the emergence of higher red volume and price starting to consistently close lower in conjunction with a consistently falling AD indicator. Large red-bodied candles with higher than normal volume help to avoid any divergence between price and the AD indicator during this progressing downtrend. With a swift bullish reversal, we see there's a minor divergence between the AD indicator and closing price, but it would be quite sensible to have ignored this given the overwhelming bullish context in the transition to October. Another situation here where minor to moderate gaps don't see any major divergence between the AD indicator and price due to these candles also being large red-bodied candles with small wicks that are dropping in the same direction as these gap downs. There is a minor exception here where the purple arrows are pointing to due to the proportionally longer lower wick and increased red volume of this candle. That in itself could point to the possibility of an upward reversal, but that would be a low possibility given this single factor, in addition to the fact that price immediately closed lower in the following few days. Eventually, this minor upward retracement gives way to a bearish continuation, and that's not too surprising given that the AD indicator and price don't get back anywhere near their previous highs, followed by red volume at normal levels easily taking down both price and the AD indicator. At this potential bearish reversal point, there's no divergence even though there's a gap and a red candle for the peak, due in part to the proportionally longer lower wick and highest volume on this peak candle. Later, when there's a downward acceleration to this new trend, there's no divergence even though there's a noticeable gap, which is again due to the red candle falling in the same direction as the gap down and having a large red body and having little to no upper or lower wick. The following movement is relatively flat and comprised of small candles, but the overall trend is still downwards for both the AD indicator and price, providing further confirmation of the residual strength of this ongoing downtrend. Similar to previous downtrends, we see these characteristics on a smaller scale with these spikes in volume and red candles. Near the beginning of October, there's that minor gap down which causes some divergence even though the candle is red. This is due in part to the proportionally longer lower wick and the relatively small body, along with a still high level of red volume. Similar to previous examples, during periods of increased volatility but relatively unchanged price, it can be helpful to sometimes look at both a candle and a line chart to better see areas of divergence and synchronization between price and the AD indicator. This is helpful for both identifying potential continuations of a trend or a complete reversal. Similar to drawing trend lines on a price chart, drawing a trend line on the AD indicator can also help to identify potential breakout areas with sharper price movement that could be accompanied by higher volume and more aggressive price action. Though this is an additional and secondary use of the AD indicator, which is less reliable, especially when you use shallower and longer term trend lines, in comparison to the AD indicator's normal use of identifying and confirming trend strength.